Welcome to the Alts Report, where we explore the value of alternative investments and the trends shaping today's markets. Today, I'm pleased to welcome Alison Nest, Head of Investment Solutions Products for Morgan Stanley Wealth Management. Over the past few years, we have seen increased adoption of alternative investments from high net worth investors. This is a trend we do not expect to slow down. In fact, a recent industry study indicates alternative investments assets under management globally is expected to more than double from here over the next decade, with high net worth clients being the fastest growing segment in terms of both adoption and increasing their allocations. Ali, thanks for joining us. Let's jump right in. Let's start with what are alternative investments and what role can they potentially play in client portfolios?
Thanks, Brian. Absolutely thrilled to be here. So alternative investments include private equity, private credit, real estate, infrastructure, hedge funds, essentially everything beyond traditional stocks and bonds. Alternatives are not tied to market movements, offering unique investing opportunities, particularly during periods of market stress. They offer eligible clients an opportunity for diversification and risk-adjusted returns that can help enhance the performance of a traditional equity bond portfolio. And given their versatility, they can align with different financial goals. For example, portfolio diversification. As mentioned earlier, alternatives are not directly tied to market movements and aim to maintain low correlations to traditional equity markets. They really can help counterbalance and reduce overall portfolio volatility. Next is growth-oriented alternatives. These solutions focus on generating excess returns and wealth accumulation, often leveraging the illiquidity premium of private markets through such strategies as venture capital and leveraged buyouts. Next, income generation strategies. These seek higher yields and lower volatility compared with traditional fixed income investments, helping to provide current income streams and inflation hedging through such products as non-traded REITs and private credit strategies. The last one I touch on is tax advantage alternatives. They're designed to alleviate tax liabilities and offer benefits such as deferred capital gains. For example, we offer equity exchange funds that can help mitigate concentrated stock positions. And given these many advantages, Morgan Stanley Wealth Management's Global Investment Committee recommends that alternatives constitute as much as 25% of a client's investment portfolio.
Clearly not a homogeneous asset class or a one-size-fits-all approach. In my opening, I mentioned we are seeing increased adoption from high net worth investors into alternatives. Can you maybe expand on that, and why do you think that is?
Yeah, no, absolutely. So in today's clearly dynamic market environment, clients are increasingly aware that relying solely on public markets can mean missing significant opportunities. Reflecting this, Morgan Stanley Wealth Management is seeing impressive growth with over $250 billion in client AUM invested in alternatives, making us the largest alternatives provider on the street. And I'd say there's really three main factors driving this demand. First, recent market volatility has clearly exposed the increased correlation between stocks and bonds and the limits of traditional 60-40 portfolios. Second, a growing portion of the economy is shifting to private hands, and our clients are demanding access. Today, there's 1/3 fewer public companies than 20 years ago. Companies are staying private for twice as long as they did in the past. In fact, 80% of companies that generate at least $100 million in revenue are now private. Within the credit space, bank participation as a primary lender has dropped by 60% since the mid-70s. And as for real estate, 94% of it's privately owned. Innovative structures and all the product proliferation that has been coming to the market, like registered vehicles and evergreen funds, have made alternatives more accessible with better liquidity, lower minimums, simplified reporting, streamlined tax reporting, and alike.
You touched on it briefly in your prior comments just around the platform. Maybe spend a bit of time on just how is Morgan Stanley making alternative investments available for clients?
Excellent question. So as an innovator and leader in alternatives, Morgan Stanley continues to focus on delivering exclusive opportunities to clients while improving access, ease of use, and liquidity across its platform. We have 300 professionals dedicated to the alternative investments business and a 45-year history of success. It's a highly selective process, and each fund must pass a rigorous due diligence process. Moreover, because of the size and scale of Morgan Stanley's alternatives platform, we're able to negotiate hard on behalf of our clients. Last year, 80% of the funds we offered were exclusive, first look, or at improved economics. Today, we offer a menu of about 220 third-party and proprietary funds across each of the different alternative asset classes. And this helps us ensure that we meet the comprehensive needs of all of our clients. So it's really not just about volume, it's about access to top-tier managers who choose to work with us because of our network, quality, and platform. We're the partner of choice for the leading alternative investment managers. It's true, and it's actually very powerful. In alternatives, access and quality are everything.
So, Ali, final question. A few of the viewers may not have made an investment in alternative investments before. Are there any considerations they should keep in mind?
Really important and excellent question, Brian. So, as mentioned, alternatives can add significant benefits to a portfolio. However, these products are complex. While evaluating potential return and risk is essential, so too are considerations like tax efficiency, liquidity needs, and personal preferences. Morgan Stanley's financial advisors can play a crucial role in offering insights and guidance on how alternative investments can be integrated into clients' financial strategies. They can assist in navigating a complex yet potentially rewarding asset landscape. So when thoughtfully integrated, alternative investments can broaden diversification, offer exposure to differentiated strategies, and help strengthen a portfolio's long-term potential.
So, Ali, that was great. Thank you. Appreciate having you on the Alt Report. We appreciate all you joining this edition of the Alt Report. To learn more about alternative investments and our platform at Morgan Stanley, please visit ms.com/alts or reach out to your Morgan Stanley financial advisor or private wealth advisor. We look forward to seeing you next time.